Problem number 1 is printed at the end of the chapter. Go to end of the chapter. You will find there are questions printed. Yes or no? This question was asked for 2 marks. Question 1, second or third last page, or find out wherever it is. RBI sold a 91-day treasury bill of face value of ₹100 at an yield of 6%. Reverse answer question. Yield is given. What was the issue price? What was the issue price? What is the formula for yield? Formula for yield is face value minus issue price upon issue price into 91-day bill 365 you can take, divide by n into 100. Just try this answer. Yield is equal to face value minus issue price upon issue price into 365 by n into 100. This is 6. 100 minus x upon x into 365 divided by 91 into 100. Solve. Any answer? No answer. 1 minute. Okay. One student is saying 98.53. Do you agree? Have you done? Okay. So write rupees. That is your issue price. Others will check. We can cross check also whether it is right or not. Calculate interest on this 98.53. Take on your calculator 98.53 into 6% into 91 by 365 equal to how much interest you are getting? 1.47. 1.47. So 98.53 and plus 1.47 becomes 100 rupees on maturity. Okay. Okay, one more question I will dictate. Write down. This you have noted. I am assuming you are able to calculate the equation. Question. RBI offers 91-day treasury bills to raise rupees 5,000 crores. The following bids have been received. I hope you are writing. The following bids have been received. Following bids have been received. So one table I will draw. A, B, C, D, E, F, G, H. These are the Parties who are bidding, their names. Okay. Bid rate. How much he is willing to pay? 98.95. 98.93. Write carefully because they are very close. 98.92. 98.90. Again 98.90. 98.87. 98.85. 98.85. And the amount in rupees crores. Amount in bracket rupees crore. 1800, 700, 1000, 1200, 600, 200, 350, 150. So write down, there are two questions. First question A, write down who are the winning bidders? Who are the winning bidders if it was a yield based auction? If it was a yield based auction, comma, and how much of the security will be allocated to each winning bidder. How much security will be allocated to each winning bidder? And one more question B. If this auction is single price auction, what is the price? What is the price to be paid by the winning bidders? What are the what is the price to be paid by the winning bidders? In first case, who are the winning bidders if it was a yield based auction? And how much of the security will be allocated to each winning bidder? How much funds we want to raise? 5,000. So we have to first issue to the one who is willing to pay the highest price. So just check who is willing to pay the highest price. A, then B, then C. Okay, is it arranged in the descending order already? Yes. So A 1800, B 700, C 1000. Is it sufficient? No. How much is the total of this? 3500, but I require 1500 more. And there is a tie between D and E. So D and E have bidded for 1200 and 600. So we'll allocate in the ratio of 2:1 the remaining amount. So write down answer of A. Answer of A. First write down fully accepted bids will be as follows. Fully, I am dictating, fully accepted bids will be as follows. Fully accepted bids will be as follows. Now you draw 3 columns in your notebook. 3 columns. First column, bidder, middle column, price quoted, and third column, amount. Bidder, price quoted, amount. Bidder write A, B, C. Price quoted write 98.95, 98.93, 98.92. Amount write 1800, 700, 1000. Take total of last column only. Don't take total of rate. Total of last column 3500. Now next line write down. D and E will be allotted. Note D and E will be allotted rupees 1500 crore. D and E will be allotted rupees 1500 crore. In bracket write, in bracket, that is 5000 minus 3500. Bracket close. D and E will be allotted rupees 1500 crore in the ratio of 1200 is to 600. In the ratio of 1200 is to 600, that is 2:1. That is 2:1. Okay. Again next line. Therefore, amount allotted to D equal to. Therefore, amount allotted to D equal to 2 by 3 into 1500. 2 by 3 into 1500. 1000. Next line, amount allotted to E. Amount allotted to E will be 1 by 3 into 1500. Rupees 500 crore. Rupees 500 crore. Okay. Second question. On the screen in your book also, if this auction is a single price auction, that means they want to issue all the treasury bill at a single price. What is the price to be paid by the winning bidders? What is the price to be paid by the winning bidders? Is it right? So that means now I will not allocate at 4 different prices. Now I will allocate at a single price such that I should be able to raise rupees 5000 crore. So I will start with the highest, but I will not be able to raise. Then I will take next also. So total cumulative 2500. Still not possible. Add this also. Take cumulative 3500. Add 1200 also. How much? 4700 and 600. So now if you want to issue the treasury bill at single price, you have to take that cutoff price which will satisfy all the bidders, and company is able to raise, or RBI is able to raise rupees 5000 crore. So just you have to write one line. Answer B. Had this been a single price auction, the price to be paid by the winning bidder, would be rupees 98.90. because rupees 5,000 crores can be collected, because rupees 5,000 crore can be collected by accepting bids up to rupees 98.90, by accepting bids up to rupees 98.90. Even in that book building option we have seen like this. Okay, you have to keep on reducing till you reach a price where your target amount can be realized. If the target is to raise a particular amount of funds, in book building also they do like this. They will receive bid from lakhs of people, they will write like this, and then that cutoff which gives them the desired money can be taken as a cutoff amount. Okay, this answer is over. Features of treasury bill. Come back to the discussion. Features of treasury bills. In between we'll take some problem. You will remain awake also. Features of treasury bill form. The treasury bills are issued in the form of promissory note or in the physical form. That means there will be certificate, or by credit to the subsidiary general ledger account or guild account in the dematerialized form. So now even this instrument has been dematerialized. So you can get in physical form or demat form. Then banks maintain this kind of ledger accounts with RBI. So where it is transferred. Eligibility. Treasury bill can be purchased by any person, firm, company, corporate body and institutions. And somewhere above they had written a different note. Only by state government, foreign bank and like this. So a student is confused. State government, non-government provident funds governed by PF Act 1925 and Employees Provident Fund Act and Miscellaneous Provision Act 1952 are eligible to participate in auction of 14 days and 91 days treasury bills only on a non-competitive basis. Non-competitive bids are accepted at the weighted average price. Arrived at on the basis of competitive bids accepted at the auction. We have not discussed this method in that example. Otherwise there can be a weighted average price also. Rate multiplied by quantity, and they can arrive at a weighted average rate. So these parties which mentioned here, state government, PF, they can participate in two types of treasury bill, 14 days, 91 days on a non-competitive basis. Treasury bills are approved security for the purpose of SLR. So that is why these are invested in by the banks, popular with banks because it meets their SLR requirement. While RBI does not participate in the auction of 14 days and 364 days treasury bill, RBI does not participate, but it will be at its liberty to participate in the auction and to buy part or whole of the amount notified in respect of 91 days treasury bills. So RBI if it wants, it can participate in 91 day treasury bills. These are all minute rules and regulations which I don't think they will ask you in the exam. Too much of legal complication involved. They cannot purchase 14 days and 364 days, but they can, if they want, can buy 91 days treasury bill. Primary dealers also underwrite a minimum of 25% of the notified amount of the 91 day treasury bills. Primary dealers will underwrite how much? Minimum 25% of 91 day treasury bills. They also underwrite the amount offered by RBI in respect of 14 days and 364 days treasury bills. Okay, now you come to this line in which you will be interested. What is the minimum amount of bid? Treasury bills are issued in lots of 25,000 rupees. If it is a 14 days or 91 days, okay, maturity. But if it is 364 days maturity, the lot size will be 1 lakh rupees. So again, depending upon maturity, the lot size will be 25,000 or 364. Now what is the repayment obligation? The treasury bills are repaid at par on expiry of their tenure at the office of the RBI, Mumbai. And availability. All the instruments are highly liquid instrument and available for trading in both primary market and secondary market. What is the day count convention? For treasury bill, the day count is taken as 364 days in a year. So actually the correct calculation will be based on 364, but in the exam they even allow 365 days, because many people, even they may not know that in different market conventions are different. Some market have 360 days convention also for interest calculations. Okay. Now additional features below. First, treasury bills have the following additional features. Government's contribution to the money market. That means when government is issuing treasury bill through RBI, it is in one way entering into the money market. Second, it mops up short-term funds in the money market. Those who have short-term surplus can invest. Sold through auctions. I have given one example. Discount rate is market driven. Focal point for monetary policy. So RBI uses this as a tool of monetary policy and helps to meet the temporary mismatches in the cash flows. Now question is, what are the advantages to the investors of treasury bill? Why would somebody invest in treasury bill? First benefit, manage cash position with minimum balance. Keep only minimum cash for your working. Surplus invest in treasury bill. Good or not? So that you will earn some interest. It increases the liquidity. If you want to convert into cash, you can do it because there is a secondary market. Risk of default almost negligible. Market related assured return. No risk of return. You know what is you are going to get. Eligible for repo also. That means you can sell it to the RBI and raise funds. Use it as a collateral in repo transaction. Used for SLR requirement. No capital loss. What is no capital loss? You will not lose the capital. It's a guaranteed amount given by guarantees given by government. Two-way code by DFHI. What is DFHI? Discount Finance House of India. You can get it discounted with them, because suppose you want to convert into cash, as I said yesterday, government has created this institution for discounting of money market instrument. So it provides liquidity. Or primary dealers or banks. Transaction cost is very low. No tedious. Wow. I like no tedious. Transparency, simplified settlement, and high degree of tradability. An active secondary market facilitates meeting unplanned fund requirements also. So these are some benefits of treasury bills. The PDs, what is PD? Primary dealers, have assumed the role of market makers in treasury bills, and they regularly provide two-way codes. So that means if you want to buy or sell anytime, you can approach the primary dealers. They can buy also from you, sell to you. This has added the liquidity and deepened the secondary market of this instrument. The treasury bills have emerged as an effective instrument for dynamic asset liability management. So this is one of the highly traded instrument in secondary market as far as money market instruments are concerned. If you have surplus, you can invest, okay, and if you need money, you sell them and convert into cash. Banks use it extensively because it meets their SLR requirement also. And due to its mode and periodicity of issue, weekly and fortnightly auction. So RBI conducts weekly and fortnightly auction. Periodically they conduct the auction and of different maturities also. 14 days, 28 days, 91, 364. So you can invest according to your needs. As also the existence of a well-developed secondary market, the fund manager could build up a portfolio of treasury bills with varying maturities which will match with their volatile liabilities. Each according to his need can invest. So this was a long discussion on treasury bill. Now commercial bill. This is your favorite 12th standard or CPT foundation, bill of exchange. Ram sells goods to Shyam for 1 lakh. Ram draws a bill. Okay. But then Shyam will make payment after 6 months. What will Ram do? He will go to the bank, get the bill discounted. Bank will recover from Shyam. But RBI has a facility here also. If this bank also wants to get it further discounted, they can do that also. Okay. So commercial bills also acts as a source of short-term finance for the businessman. For the banks, they earn a high rate of return on this. So that is commercial bill. Why this paragraph is so long? Because there are a lot of regulations also mentioned with respect to commercial bill, which we will see. So commercial bill is one which arises out of a genuine trade transaction. So RBI has said you cannot issue accommodation bills. Have you heard that accommodation bill in some CPT or 12 standard? That means there is no real transaction. There is no sale purchase, but one person wants to just accommodate the other party. So I will draw a bill on him. He will accept. I'll go to the bank, get it discounted. So actually there is no underlying transaction, but because he has accepted the bill, I am able to raise the funds. This is not allowed. There has to be a genuine trade transaction. Your teacher must have told you in the CPT or foundation syllabus, yes or no? Or he has not? Accommodation bills are absolutely banned. As soon as the goods are sold on credit, the seller draws a bill on the buyer for the amount due. The buyer accepts it, immediately agree to pay the amount mentioned therein after a certain specified date. A bill of exchange contains a written order from the creditor to the debtor to pay a certain sum to a certain person after a certain period. What is printed there? Creation period. How can the institute make such mistake? After a certain period. A bill of exchange is a self-liquidating paper. Underline. True, false. Bill of exchange is a self-liquidating paper. And you will write, I don't know what is self-liquidating paper. It has a maturity date. On that day, the life of that instrument will come to an end. Either you honor it or you dishonor it. Okay. And it is negotiable. Negotiable means, can one person transfer to other person? Yes, it can be. It is drawn always for a short period, ranging between 3 to 6 months. Bill financing is the core component of meeting the working capital needs of corporates in developed countries. Underline developed countries. In India, whatever minimum number of audits I have done, small companies, big companies, listed companies, I have not seen bill of exchange. Is it right? Now it is there, but very limited. But in developed countries, this concept of bill of exchange has been there. Even in CPA syllabus, which I appeared after in 2007, bill of exchange is there in their negotiable instrument act also. Such a mode of financing facilitates an efficient payment system. Okay. Bank is also sure that there is a person who is going to make the payment. You are also happy, I don't have to wait for 6 months. So commercial bill is the instrument drawn by the seller of the goods on the buyer of the goods. RBI has pioneered its efforts in developing bill culture in India, keeping in mind the distinct advantages. What are the advantages? Self-liquidating in nature. Recourse to two parties. First, that drawee, and if he doesn't pay, drawer. Okay, you can catch hold of first the person who has accepted the bill, and if he does not pay, the one who has discounted the bill. Remember those happy days, and you know exactly when the transaction will settle, when will the payment be received. Transparency of transactions. These are the benefit of commercial paper. RBI introduced Bill Market Scheme, BMS, Bill Market Scheme in 1952, and the scheme was later modified into New Bill Market Scheme, NBMS, in 1970 on the recommendation of Narasimhan Committee. Under this scheme, commercial bank can discount with approved institution. Underline, even commercial bank can discount with another institution. Which other institution? They should be approved institution. For example, commercial bank, insurance company, development financial institutions, mutual fund, primary dealer, etc. The bills which were originally discounted by them, provided the bills should have arisen out of genuine commercial trade transaction. Everywhere you will find in this note genuine commercial trade transaction. So there must be an underlying sale purchase transaction. Okay. Now we will continue tomorrow.